It is earnings season after all, and we do have results from the regional banks after the blockbuster numbers from the biggest banks earlier this week. Herman Chan is Bloomberg Intelligence senior analyst for U.S. regional banks. And Herman, when we look at the regional banks, they're much more of a read, a proxy for the overall economy, the health of companies and consumers, as opposed to how trading desks are doing.
Sure.
What's the takeaway from results from U.S. Bancorp, KeyCorp, and M&T Bank?
Yeah, so I would say that overall the credit quality is really pristine across those banks and the banks like PNC that reported yesterday. On the other hand, we're seeing, as Jamie Dimon said, some cockroaches, and we're seeing them on a few bank balance sheets today. Zions and Western Alliance has disclosed some exposure to a non-bank financial institution, and that's really hitting their shares today, and it's taken down the entire regional bank group.
So are regional banks, when I think about them catering to small and mid-sized businesses, the backbone of this U.S. economy. Are they writing loans these days?
They are. They are writing loans, not much on the commercial real estate loan side, but they said they're open for business. They just have a lot of payoffs and paydowns from some of the loans that they've done over the years. And so they're looking to backfill that, but it's been a slow go. On the other hand, there's a lot of pent-up supply for lending on the commercial front. So if you're a small, medium-sized business, corporate business, the banks are open for business and looking to generate loan growth on that front. That's probably the primary driver for lending across the regional bank space today.
So I'm curious to just kind of dig in a little more to the credit problems over at Zions. Was that idiosyncratic and specific to Zions, or do you look for more instances of this as we continue to get numbers out? Yeah,
it's really interesting because we've had a couple shoes drop already this quarter, right? We had the Tricolor issue, we had First Brands, where a few banks were involved in that. And now there's this third one, which is something called Cantor, which relates to mortgage loans. And we're digging deeper into that today. It's something that wasn't on our radar screen until Zions flagged it yesterday. And it looks like a couple of lenders, Western Alliance and Zions, have exposure to this. And Zions specifically noted about a $50 million credit loss related to this relationship.
But overall, give us credit quality better than it was prior years?
Yeah, I think it's been slowly normalizing after the pandemic, where we had just an influx of money coming in from the government that was propping up the credit quality for consumers and businesses. But it's been really strong across the board, and banks continue to talk about improving credit quality in 2025. That being said, there have been these one-off issues that's really raising a lot of eyebrows for the market today.
And of course, when we talk about regional banks, there's so much anticipation that there's going to be consolidation. There's going to be M&A. We saw Fifth Third, of course, make its own purchase. We saw Pinnacle and Synovus. Do these results shed any light on who's likely to be a target versus buyer?
Yeah, I would highlight First Horizon yesterday as probably the biggest potential for that and M&A, because historically, First Horizon was viewed as a seller. It tried to tie up with TD Bank before TD ran into some regulatory issues, and that merger failed to gain approval. Yesterday, they talked about potentially being a buyer instead of a seller, so that really whipsawed the stock price yesterday, with it down about 10%. So it's really interesting to see who's a buyer and who's a seller, and First Horizon's comments yesterday really highlighted that.
How about the valuation of the banks? Where are the regional banks? Where are we now in terms of overall valuation?
Yeah, so we're talking about price to adjusted tangible about 1.3, 1.4 times, which is a fair price. It's not super attractive. Back during the worst of the SVB issues, we were about 0.9 times. So they've had a good run up over and have recovered over the past few years, but there's still a more of a valuation premium on the largest names like the JP Morgans of the world versus the more economically sensitive names like the regional banks that I cover.
What will you be watching for going forward here? I mean, in terms of, you said you're going to dig into some of the issues Zion's brought up, but what else do these results point you towards in terms of what could be a factor in the fourth quarter and next year?
Yeah, so the banks continue to tout really strong top line growth, which is interesting given a lot of uncertainty about what's going on with the economy and rate cuts. There's something called fixed rate asset repricing where all of those securities that they added when rates were zero are now paying off. And so they're adding new securities at higher rates. So that's a positive. And then there's some loan growth that I talked about earlier as well. So that's driving the top line trajectory, and banks seem pretty constructive on that front.
All right, very good. Herman Chan, thank you so much. We appreciate that. Herman Chan, Senior Analyst for the regional banks here.